Commercial finance. In a nutshell, commercial finance is everything that we've spoken about here, what are banks looking for. However, there are certain things that you got to understand about commercial finance. First off, if you're developing just a house, well, if you're just building a house to live in, or just one single dwelling, or you're just doing two townhouses, usually they will fall under residential loan, and a commercial finance lending requirement would not trigger. But if you have 3, 4, or if you're doing it on a regular basis, you would want to go and talk to a commercial finance manager in a bank rather than a resi manager, because there are a lot of things that those residential business managers, those so-called business managers in the branches, their limit is under 5 mil, or their limit of their loan. Some of them have a loan limit of, they can't approve a loan over $2 million. So anything over $2 million, they've got to flick it to somebody higher up, or to their commercial department. So as a rule of thumb, anything over 2 townhouses, if you're developing, you should be looking at commercial finance. The LVR, the loan to value ratio, in commercial finance is usually 60 to 75% of GRV or TDC. GRV is the gross realization value, or TDC, which is the total development cost. So this is how they would do. And I've got a loan document here, which is a real loan document. And these are the terms and conditions that we have agreed to for a recent development that we are doing. And all I've done is I'll go through that later. But anyway, here, maximum 60% against the undeveloped security value prior to commencement of the development in accordance with council approvals, or maximum 80% against the total development costs, example, excluding GST and exclusive of developer profit. Maximum 70% when fully drawn against the on completion valuation of security ex GST. Now this again is also GRV. 70% of GRV, that's the actual one that they are giving, but you should, as a thumb rule, you should understand this portion here, because when you are doing your financial feasibility, you would know how much you need to contribute in order to go ahead with a particular deal. So if you come across somebody, you might even want to call a few brokers around and find out if they would be able to get you that loan, or which lender would be prime to support that kind of development. Interest is usually capitalized, not usually. When the construction starts, it is usually capitalized. However, some lenders are very smart. They can, even when you are constructing, they might put something known as a management fee, and they might ask you to put X% of the total drawn amount as a management fee, and they might ask you to pay that every month. And I have gone through that. Facility is jointly and severally guaranteed, as we've explained earlier, which basically means that 100% that you are 100% responsible for the loan, and so is the other person in the mortgage. So lenders may ask for pre-sales. They do that to mitigate their risk, and also test the product fit for the market. So not only that, what they're trying to do is also ascertain that what you have built is actually what's in demand in the market. Somebody wants that kind of product, because I come across a lot of permits that people manage to get, but they can't get any pre-sales because nobody wants to live in an apartment in that area, because they all prefer to live in a house or live in a townhouse, for example. So smaller apartments, for example, for less than 45 square meters, banks don't like to lend on such small size apartments unless perhaps you have managed to achieve 100% pre-sales. So and every day what's happening is because a lot of apartments are coming on the market. Not only that, apartments are the only things that are affordable these days, because the land is averaging anywhere between 700 to 800,000 in Melbourne and Sydney as a median price. So more and more apartments are being built, and more people are actually buying apartments to live in. And banks actually, they started off with 50, now they've gone to 42, 40. So if you build anything smaller than them, that means try and squeeze that money to maximize the value, or for your development. You might face problem getting financed because the bank might say you made them too small, and that's a big risk for them.